Many of you asked me about my opinion on United Healthcare stock, ticker symbol UNH. I've done many videos on UNH, but it's down over 8% over the last months and over 11.5% year to date. If you compare it to the S&P 500, this stock is doing horrible on a relative basis. There's many reasons why. There's some hacking involved. There's some antitrust lawsuit and many different things with the business. So I decided to do a very quick video and give you an update and just look at United Healthcare and try to determine if this is a buy the fear kind of opportunity, buy the dip opportunity, or is it more of some kind of a value trap and it's something we should avoid. Now, the first thing that went wrong with United Healthcare, it got hacked through some hacking team from I don't know where, and they had to pay a $22 million ransom to try to run the systems again. And the systems are not even fully recovered yet. They're going to recover them, I believe, by something about mid-May or April or May. So it's been an absolute disaster. It has delayed many things within United Healthcare, but also within other platforms. A lot of different healthcare companies, they had to pay over $22 million. This is the first thing that went wrong with United Healthcare. The second one, which has triggered a massive sell-off, is mainly the antitrust investigation by the DOJ, which is mainly around the massive healthcare conglomerates' potential anti-competitive effect, because they do own something called Optum, and Optum is more of the services care of the business. So it's not just insurance, United Healthcare. They have Optum, which is kind of what CVS did with them buying clinics, Oak Health, Signify Health, trying to do a lot of things with pharmacy. This is what Optum Health is, and the company has been trying to expand it. It's been growing revenues massively. So the argument here is that United Healthcare is becoming a monopoly because they have the insurance business and they also control the primary care, doctors, services kind of side, and they can work together. They could have some kind of a monopoly effect and price gouge customers or whatever people believe. And it's not just United Healthcare. CVS has done the same thing. Walgreens, they don't own the insurance business, but they're trying to do the same thing. Cigna is trying to do the same thing. So it's not just United Healthcare, but it's the largest player in the industry. And this could be very, very bad. Now, this reminds me of what happened with Amazon. Some kind of DOJ antitrust investigation came on Amazon. They want to break Amazon apart or whatever. Nothing has happened so far. And Amazon did dip on the news like an 11 or 12% decline, kind of like United Healthcare. Everyone freaked out. It was a massive buying opportunity. And if you did buy this dip, now Amazon is sitting much, much higher. I feel the same with United Healthcare. I mean, what is the worst thing that could happen? They break up Optum and United Health. I think Optum will be worth much more than 15 times free cash flow within United Healthcare, because Optum, a lot of the different business models are growing 15-20% annual, sometimes even more within certain areas of the business. So it's rapidly growing, and I think it's worth much more than 15 times free cash flow. So if they do get broken up between United Health, which is insurance arm, and the services, which is Optum, I mean, I think there would be a massive value creation for shareholders. So I'm not really sure what could happen here. And I try to stay away from companies with lawsuits and many different things. But United Healthcare is an amazing, high-quality company, and it might be worth the risk-reward. And this is a company that has never had a negative year in terms of revenues. It has grew revenues every single year since 2001 or 2002. They had $25 billion of revenues, and now in 2024 it's around $400 billion. So you can see the massive compounding effect, and the company keeps on growing revenues, keeps on growing EPS per share, 12, 13, 14%. I should say EPS. I always make a mistake and I say EPS per share, but it's mainly earnings per share. But yes, earnings per share, they grow around 13, 14%. It's pretty amazing. The balance sheet is not bad. They have $29 billion of cash, $47.5 billion of long-term investments, and long-term debt is around $58 billion. It's not a concern at all. Net debt is something like $18 billion, and they do have long-term investments they can sell if they want to, and it's a massive free cash flowing machine. As their dividend is not huge, they do some buybacks and they pay a dividend, and they could do whatever with the remaining of the free cash flow. So the balance sheet is good with United Healthcare. They have an amazing compounding effect in terms of growing revenues. Even return on capital are pretty high for a company, sitting at 15 times free cash flow. Return on capital or invested capital went from 17% to 19%. So this is pretty amazing for the multiple. If you look at it in terms of an earnings multiple or a free cash flow multiple, you could say, which I prefer more within healthcare companies, it's sitting around 15 times market cap to free cash flow multiple. The mean was 17.5 times. It's traded as high as 23 times and as low at 10 times it was in March or April of 2020. So at 15 times earnings, we could get a potential multiple expansion back to 17 and a half times earnings where it was trading at recently, and even in 2021 it was trading upwards to 21 to 22 times earnings. So I think the multiple is fair at 15 times. In terms of EPS per share or earnings per share growth, it's been growing around 12%, 13%, 14% on average is expected, around 13 to 12%. So I would say around 13% earnings per share growth, and you have a potential multiple expansion like a 1.8% dividend. So I could realistically see a 13 to 14% annual return on United Healthcare from this price. I think the stock is a buy on fundamentals. It's a very high quality company. It will likely continue, but I'm just unsure about what could happen in the elections. You could have a new administration, a new president. They come up with some new laws or rules, even though the healthcare system has been the same in the United States for a long time, and they keep trying to change things, and it never works. And United Healthcare keeps on growing and trying to deliver value to customers. So I'm not sure what could happen with the election, but I'm also not sure what could happen with the antitrust investigation. I mean, worst case scenario for me is it breaks them apart, and I think Optum is worth much more than 15 times free cash flow on its own because it's growing like 15, 16%, and maybe they have to pay a fine or something, and then and that's the max. That's what I see. I'm not experienced with that stuff. Maybe you could look into it if you're more experienced than me. But for me, looking at fundamentals, looking at the price action, I think this is a buying the dip opportunity. I see something like what happened with Amazon. I think will likely bounce very, very soon. And this was not financial advice. It was just my very quick take on United Healthcare stock. Thank you for watching the video. I really hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.